welcome back to another episode of Ticker Symbol Live, the channel where we focus on ARK Invest buys and sells each and every trading day to see how their vision of the future maps onto the market today. Today, I'd like to talk about a stock that's near and dear to my heart. It's called TWOU, ticker symbol TWOU, even though the company's name is 2, the number, U, the letter. So it's a case where the stock ticker is actually longer than the company's name. For some reason, I find that quite funny. So let's go to the ARK reactor and see why we're talking about TWOU. So this is the ARK reactor, and today I have it ordered by change in ARK Rank. So what we were doing before is we were always looking at the change in shares held to look at the biggest buys and sells purely in terms of change in relative position size, right? So if they double their position, that's going to be plus 100% shares, and that seems meaningful to me because it's an outsized buy. But today, I'd like to flip the script and show you a different way of looking at things. So I have things ordered by change in ARK Rank. So change in pure relative position on this stacked bar chart of all of ARK Invest's actively managed ETFs put together. Again, the way we look at this is Tesla is always number one. Tesla sits in ARKK, ARKW, and ARKQ, and they make up about 8% of ARK's overall actively managed dollars. So they're in position 1, meaning they're in the top of this bar chart. So what we can track day by day is how stocks move up and down on this bar chart. That's the ARK rank, and the change in ARK rank column shows us that relative change in position. So for example, this top line here is cash. Cash has moved up 22 ranks, meaning ARK Invest is holding a lot more cash today relative to their other positions than they did yesterday, and that's worth noting. Second is 3D Systems, a stock we've talked about very recently on this channel. And third is TWOU Inc., the topic of today's live stream, right? So 3D Systems, just want to point out, we covered this, and ARK Invest has continued to buy in deep. This is because of a price change, right? 10% down, and ARK Invest is taking advantage of this dip and clearly seeing it as a buying opportunity. So between yesterday and the day before, increased their percent shares in 3D Systems by another 80%. Then we have TWOU. TWOU didn't move at all. In fact, ARK Invest dropped shares yesterday. So why are we talking about it? Well, because they dropped shares of all the stocks around it a lot more. And when you have constant inflows of cash, the thing I want to point out to you is when you decide not to sell a position, even though you're selling all the other ones around it, that's the same thing as growing that position, right? So when you're getting constant inflows, there's two ways to grow a position. Grow it by literally buying, or when it's time to shrink positions, not shrink that one, which means you're increasing its relative weight. And that's what we're seeing with TWOU, and that's why looking at this data is so important. Because even though this is colored tan because they didn't change their holding size, because all of the holdings around it changed, it moved way up in rank. It's now their 34th biggest position overall with just under $400 million in it, which makes it worth talking about. If we instead colored this by rank, this would be the greenest bar. But because we have it colored by change in shares, it's not. So let's talk about TWOU. Let me stop sharing my screen here, and we will kick off their investor presentation. And it's a good one. So let me first start off with showing you the stock. Hopefully you can see this pretty clearly. They are about 30% down from recent highs. And I just like to use that as a nice indicator of, yeah, I would buy it right now. No, I wouldn't buy it right now. But that's really what I'm looking for, because 30% down means almost 50% up if it touches a new all-time high from here, right? So down all the way from $55 to a little under $39 a share today. So what the heck is this thing? TWOU is an education online platform, right? Here's the investment thesis. And let me just make sure that this looks good on my screen here. Make sure that you can read it. It's nice and big. Excellent. It's got a leading position in a multi-trillion-dollar market with accelerating digital adoption, that market being online education. They're uniquely positioned to develop high-quality educational offerings across the career curriculum continuum, and they have a great chart of what that means that I'll show you. They're the preferred digital transformation partner for top global institutions. And here they mean literal institutions, as in education institutions looking to bring their courseware digitally. They have a sizable and scalable, that's really important, platform delivering strong growth. And they have a sustainable, resilient business model with financial flexibility to execute strategy and drive cash generation. And what that really means is, in a time of pandemics, they're useful whether the pandemic is going on or not, because they're offering real convenience to the education experience. And I always like to think about this in terms of legacy industries, right? Legacy auto sucks. Buying a car through a dealership sucks, but cars are awesome. People like cars. People like Teslas. People like buying cars through apps. People like the car experience. It's the car buying experience that needs work. People like banking. Banks suck, right? So what's going on here is there's a shift in the way we do the thing we need, because the mechanisms that we do them through today are not that useful, right? Traditional brick and mortar banks used to be assets, are now liabilities, is the fundamental thesis on banking of ticker symbol LIVE and ticker symbol U. But banking is sweet, right? Banking apps are cool, new finance apps are cool, and neobanks are cool, right? The same is true of schools. Learning is cool. People like learning. The reason you're watching this right now is hopefully because you think you're learning something. Learning is fun and it's entertaining and it makes you feel good when you learn something new. School sucks, right? I think we all unanimously agree the school experience is not the best part of our lives, right? The experience, the mechanism that drives learning needs work. And that's the market that 2U is trying to address, right? Making it more about the learning and the education and less about the schooling. Cool. Just want to focus on what the market opportunity is. So here is that curriculum continuum, right? So it starts with, here's the two axes, right? There's the time to complete the curriculum in months, and the level of intensity is the y-axis, right? So the massively online open content, for example, what you're watching now, is basically YouTube, right? Think about all the classes that, for example, MIT, Harvard, Stanford throw up on YouTube and give you for free. That's what you're seeing here, the free stuff, right? You can get through that in as fast or as slow as it takes you to get through that literal YouTube playlist. Then you move to short courses, right? So 1 to 2 months to complete, but they're, structured content available through some online platform. Think Udacity, think Skillshare, and a few of the, Masterclass and all those. Course stacks. So, now we're developing short curriculums, bundles of courses, for example. Boot camps, which are more intensive versions of that, guiding you through multiple courses in an organized order, where each course is also organized. Then professional certificates and certifications, right? And as well as, graduate certificates, I think fall under this camp. It takes me about 9 months to get a grad certificate in whatever engineering, which is about a third or a quarter of a master's degree. And then full on grad and undergrad degrees, right? Which take anywhere from 1 to 3 years, if not longer. This includes MBAs, and one day this could even include PhDs. And I have my own personal thoughts on the graduate school experience. And so this curriculum, this whole spectrum of curriculums goes from low to high time to complete. And as you do so, in terms of intensity, also notice that the cost bars go up and down. Education is one of the highest inflation markets right now today. Between textbooks and actual tuition costs, there's a big inflationary problem in education. It's a big challenge, just like we're seeing in the housing market, just like we're seeing in the banking market. So too are we seeing it in the education and institutional market. And that's what this chart is trying to capture, right? Degree programs, alternative credentials, and free content. If you go down, here's all the things that 2U does about it, right? So they have program management, they have learning, design, and development, accessibility and compliance. So, for students with, poor eyesight or other disabilities that may hinder their online learning progress, they have certain compliances, for example, keeping personal identifiable information secure and safe. They give faculty access to these programs, so think about all the back-end stuff that needs to go into developing a course and putting it online like this, placing the course online and placing the right students in the course, all the technology that comes in that stack, recruiting faculty for new online programs, career services, student success, application systems, recruitment, and of course, marketing, because now this is a digital product. So 2U is owning the education and re-education system online ecosystem, right? And that's what's going on here. Through their scalable platform, 2U is a comprehensive suite of tech-enabled capabilities powering market-relevant products across that spectrum, this continuous career curriculum, right? That's that CCC right here. So here's what they offer, and this is where I think ARK Invest has spotted a really outsized market. This is the chart that I want to talk about, and there's one branch of these bubbles in particular that I believe is the reason Cathie Wood holds this stock. Let's talk about it. 2U offers two types of pathways: professional pathways and specializations. That's the degrees and professional certificates that I think we all understand. Online education is moving online. That's what these bubbles show. And then there's something else going on: career upskilling and reskilling, right? Why is this stock in ARKQ, ARK Invest's fund themed around the autonomous revolution? Why is 2U in there? I'll tell you why. Because ARK believes, so what I switched to here was ARK Invest's white paper around automation. It's written by, I believe, Sam Corris. We can actually go back to the top and see. So if we scroll back to the top here, I'm on ARK Invest Research. It's by Sam Corris, right? So Sam Corris and Dave Conway, it's one of their thematic white papers. And I'm just scrolling down to the 4th page here. And what you're seeing here is the projected number of employees replaced with automation by industry, right? And these are in units of millions. And you can see that there's going to be a big displacement in employers and employees by 2025 and 2035, right? So many millions of people across many different industries are going to be replaced and automated out of their job, right? If we keep scrolling down, we can see that this is a total, they talk about total job openings. They talk about the friction in the job market, and then they do a good job of talking about the market opportunity of automation here, right? So there's a real financial incentive for companies to be automating out jobs. And what that's going to result in is a huge transition in what the workforce is able to do, what jobs are literally out there. Retail and trade is going to be automated away, accommodation and food services automated away, administrative support and waste management automated away, manufacturing and construction automated away, right? This is ARKQ, ARK Invest's fund themed around the autonomous revolution we're talking about. And 2U is focusing on career upskilling and reskilling. What that means is they're looking for those opportunities of reskilling the workers that are going to be automated out of their jobs. And they're saying, hey, let's move truckers. This is a hypothetical example. If the job of a trucker is going away, let's offer courses that help truckers move into a supervisory role for automated trucks. Right? Let's take all the skills they already have and bridge that gap and have them be the people managing the fleets of the trucks that used to be the jobs that they had. And you can think of dozens and dozens of jobs like that. Manufacturing workers moving to manufacturing supervisors of the jobs of the robots that just took their job. And this is a thesis that ARK has that I share, is that when you take jobs away from people, you automate them out, you actually also create higher skilled versions of that job. For example, moving from manufacturing line worker to manufacturing line supervisor, because you're supervising multiple automated robots, right? It's the same no matter where you look at it. Moving from, physical trucking to supervising online trucks, supervising autonomous trucks, supervising trucks as they go through intersections, right? Whatever that ends up looking like, you're still in a transport position. It's just a different transport position, and it's a much more skilled transport position. And I just want to emphasize, driving a truck is a real skill, but it's one that can be done by a skilled and trained machine eventually. That's all we're saying here. Not that these are not real skills, but they are skills that a machine can be taught to complete. That's all that's going on here. And there's a financial incentive to do so. So there will be a big education opportunity in bridging all of these gaps, right? All of these skill gaps between jobs that existed today and the supervisory automated version of those jobs tomorrow. So that's the market opportunity of TWOU, and that's why it sits in ARKQ, ARK Invest's fund themed around the autonomous revolution, in my opinion. They have over 300,000 registered students today. They host over 3,000 boot camps. They've helped place over 64,000 people through their certification programs. They have over 75 university partners, over 500 course offerings, and over 200,000 graduates, right? And they're encroaching on 1 million live classes. So these are big numbers. And this is only going to increase as we move to a more online version of education. One thing I should point out here is that you may not know, I got my first master's degree almost entirely online. My background is in applied math, and the funky word for it is multivariate optimization, but all that really means is applied math, right? And I got that with my undergrad almost entirely online while I was at my alma mater, right? So I was working through my physical undergrad classes, and at night I was taking online exclusive master's classes. And this was 10 years ago. So online education today should be much better, much more streamlined, much more programmatic. I have no doubt that TWOU's version of this is much better than the janky portal I went through to get my master's 10 years ago. And that's not a knock on my alma mater. I mean, internet technology has flourished in the last decade, right? Everything online is better today than it was 10 years ago. This is the opportunity that TWOU has seen and is trying to partner around the world with. So let's go on to their financial highlights. They're great. Strong revenue growth. Q4 revenue up 32%. Fiscal year revenue from 2020 up 35% from the year before. Their adjusted EBITDA, is a huge improvement, right? Almost $14 million improvement versus this time 1 year ago from this presentation. And FY20 adjusted EBITDA is a $40 million improvement from FY19 as well. And of course, we probably can point to the pandemic as the big catalyst for this kind of growth, but that's the market we live in. That really happened. Their alternative credentials and their degree programs are growing strong quarter over quarter and year over year. You can see that in FY 2018's fourth quarter, they had a total of 44,000 people in their programs, and that same time next year it was 56, and the same time last year it was 80. So really, really strong quarter over quarter and year over year growth. I see some relevant comments in the chat. I'll address them at the end. And they have good, strong revenue growth reflected by people entering their programs at a higher rate, right? So this is almost a repeat of that chart, but now in terms of dollars to dollars instead of programs to programs. And they're specifically calling out the change in dollars, which is a function of enrollees, but also things like margins and new tech stacks and new revenue streams. And of course, if you care about cash flow, which I think you should for programs like this, I'm trying to be a little more financially savvy on this channel as well, not just talking about the big idea. You can see that their free cash flow is doing great. It's almost turning positive, right? So they've spent a lot of time reinvesting in themselves and, a strong upward projection in their unlevered free cash flow. And their key takeaways, the last chart I'll leave you with on their presentation is they've delivered strong full year fourth quarter results with accelerating organic revenue. And we've seen that both in terms of course enrollees and in terms of their actual financial dollars, right? They've continued momentum toward positive unlevered free cash flow. We just saw that they were, just barely negative here, down from really low numbers, but strong upward trajectory. And then, of course, the adoption of high-quality digital education is accelerating, as evidenced by increasing demand for their offerings and services. And, just to close that out, I strongly believe that the future of education is online, and there is going to be an increasing market need for that type of education as more and more education materials become necessary to reskill formally skilled labor that were automated out of their job. So the thing I actually want to keep on the screen while I take comments and questions is this, because this is the market opportunity for TWOU and why it's in the Autonomous Revolution Fund. And again, it's a $400 million almost position overall for ARK Invest. It's their 35th biggest position, and that's why it's worth talking about. Many competitors will do well in this space. From a guy who paid for law school and an MBA. Absolutely agree. So I paid for an undergrad, I paid for a graduate degree, I paid for 2 unfinished PhDs, and I think the same thing. Online is enabling a mass shift in education, and I think there is more than enough market to go around. Education is one of those things that I think every person needs at some level, whether it's just a course certificate, whether it's just a refresher through work, or whether you go all the way through academia and pursue an MBA, a JD, a PhD, an MD, etc., right? So great call out, Robert. And one thing I want to point out too, are you comfortable with online education? One question I want to ask is, have you taken a course online? Was it through your work, or did you take the incentive on your own? And what do you think about entirely online education? So I just mentioned that I got my entire master's online. Do people trust online education as much as they do physical institutional education? Or do you think there's something else going on there, that there's a gap between the two? I'd love to hear your thoughts in the comments below, or feel free to tweet me at tickersymbolu. I'll stick around for a few minutes of questions, and then I'll let you go for Market Open. Well, I'm not hearing too many questions. Looks like it's a quiet day in the chat today, so I'll leave it there. This is Ticker Symbol Live. My name is Alex, reminding you that the best investment you can make is in you. Thanks for watching.